Hi, looks like we are good to go. And I wanted to say welcome. I'm Mary Ellen McGonagle, and I'm the founder of MEM Investment Research. I'm so happy you could join me today. I look forward to helping you become more knowledgeable about how to find and then trade trending stocks so that you can outperform the markets. And what I'm going to share with you today are some of the key ways to use various indicators so that you can have a guide to work from, and more importantly, give you the confidence so that when these triggers pop up on your screens, you can have the confidence to, again, pull the trigger and buy or sell these stocks. Um, so let's go ahead and get started. I would like to give you a little bit of background as far as who I am. Again, Mary Ellen McGonagle. And, growing up, I really did not know much about the stock markets. I always had a love of numbers, finance, and so forth, but I wasn't really tuned into how the stock market worked and what that was all about. And I did get lucky after moving college. After completing college, I moved to New York City, and I met up with someone who was able to secure me an interview with Goldman Sachs, and it worked. I was able to get in on their very active fixed income trading floor as an assistant, very low man on the totem pole, but it was really, really quite exciting. And to see all these large amounts of money being traded and moved, and at that time, it wasn't quite as electronic, so there was a lot of noise, a lot of commotion. So I knew I had found my home. And I stayed there for a bit, but I did wind up leaving to go work for what's called the buy side. I went to a large insurance firm and started out as an assistant portfolio manager. And I did manage to work my way up to becoming a full portfolio manager to the point of running over $2 billion in assets, and that was fixed income. And it was really my first experience of seeing on Wall Street how if you did run a large portfolio, you were privileged to receiving information that at that time, this is the 80s, really didn't trickle down to the average or self-directed investor. Nothing illegal, of course, just relevant information that one could trade on. And of course, the SEC has come in and changed all of that, which I think is wonderful, because now as a self-directed investor, you have the ability to have access to the very same information as institutions at the same time. And this is, again, very, very good news, because as an individual investor, you can be a lot more nimble. A lot of the institutions that I worked with and still work with, if they were to get in and out of a stock, it would take them several days. They're just not as able to get in and out of a position as quickly, which of course will make a difference. And again, that nimbleness is really going to be a huge benefit. So after years of, I was there for 8 years managing money, I did decide to move to the West Coast with my then new husband, and I joined William O'Neill and Company in Los Angeles. And many of you may know the firm. They are the publishers of Investors Business Daily, but at the time I was with what was called the institutional department, and I worked with top portfolio managers and analysts pretty much throughout the world. I traveled the globe, and a lot of that time period I was teaching our clients the O'Neill methodology. I was advising them on stocks, positions that they may hold, and also advising them on the broader markets. And a lot of that time was going through thousands and thousands of charts on a weekly basis, because the O'Neill methodology is based on viewing charts. And wonderful, I still do the same today. So I, again, more recently have started my own firm, MEM Investment Research. I do still work with hedge funds and wealth managers and so forth, but I've just fairly recently started working and sharing my newsletter with individual self-directed investors. So I would urge you to at some point take a look at it. We have some wonderful trial promotions that at some point I can share with you. But I think, again, this is a really exciting time for you as a self-directed investor to be able to get access to the same information, and most importantly, I believe, is to educate yourself so that when you trade, again, you won't get whipped around. You'll have the confidence to stay with the stock, or if the signs are pointing negative, to get out of a stock in time. So before we begin, very briefly, this is a disclaimer, and I'm not going to read the entire thing, but what I would like to point out that is that this presentation is for educational purposes only. There won't be any recommendations to buy or sell any specific securities, and then that's the primary if you want to take a moment and read the rest of this disclaimer. And then I also wanted to mention, as far as questions, there will be ample time to review. I'm going to happily answer any questions that anyone might have at the end of the presentation. Chances are I may answer the question that you have prior to the end. So let's go ahead and get started. I'll review what we are going to be covering today. First, I'm going to give a definition of a trending stock, exactly what that is. From there, we will review how you can catch that trend early. You're going to want to get in early, of course. The next is I'm going to define for you how you can pinpoint when that trend is over, and it could be an uptrend that is reversing down, or how you can pinpoint when a downtrend has reversed. We'll go ahead and review that. And this last, I say using history to give you confidence, and the reason is because we're going to be reviewing quite a few examples, and they will be, of course, historical. Some of them are up to date, but we will be looking at quite a few examples so that I can really show you exactly what we are talking about when reviewing trending stocks. Lastly, a special offer at the end, so I urge you to stick with us. It's I'm sure you'll be pleased. And then also at the very end, we'll go ahead and review questions. So let's go ahead and start at the very beginning. I mentioned to you that we are going to be reviewing what are trending stocks, and actually, basically, a lot of my work is centered around technical analysis. I do need to see strong fundamentals supporting what I'm seeing technically, but a lot of my work is technical analysis. And I will say that technical analysis is built around the premise that all stocks trend, and the trend can be upward, sideways, or downward, but being able to identify the trend and act on it is going to be really one of the most important aspects of your trading. I'm going to review a little bit more as far as trending and how important it is. If you can define when a stock is exhibiting signs of continuing to head in a particular direction, it's going to help you, again, not get whipped out of a stock. It's not going to, you won't get whipped around in the markets in general. So it's really learning this trait will be very, very helpful when you see a solid trend, and you want to make sure that the odds of that trend maintaining is in place. So we're going to go ahead and review that. A lot of the work that I do is centered around picking up medium to longer term trends for institutional clients. However, the same items, the same characteristics and metrics that I use can be applied for shorter term as well, and I'm going to go ahead and show you the difference in that. So let's go ahead and review some of the tools, and these are tools that I have found over the years. I mentioned over 25 years that are very, very critical in helping determine these trends. Over time, I've found that there are several key indicators that can really help you, and today we're going to be covering one of them is the Relative Strength Index, or the RSI. We're also going to be reviewing moving averages as well as MACD, which is moving average convergence divergence, and I'll go ahead and explain each of these in detail, but they are very, very powerful when you can put these indicators and overlay them on top of your price information. These are really going to help you, and then I'll also identify how you can screen for them depending on which screening you use. This last item here is what key characteristics works with trend indicators, and there really is one component that I have found over the years to be really useful in helping whether you can have your indicators lining up, but if this characteristic is also in place, it's going to be very telling, and that is volume. So if when your key indicators line up, the price looks healthy or in some cases unhealthy. If you see volume, that is going to really tell you that a trend, either up or down, is very likely to begin. These are institutions, their volume is showing you their hand. So again, we're going to go ahead and review that as well. So this first example that I have is NETT, and this is a stock that has been, in fact, on our MEM investment research. It's called the Edge Report, and this stock has been a big winner for us. We picked it up back here in May, and it's gone on to do quite well. But let's go ahead, and what we're looking at here is a daily chart of NETT. I'm taking you back to the very beginning and actually a little bit of the end of last year, right through to the end of June. And as you can, many of you may recall, the beginning of this year was a very, very difficult period for a lot of stocks, for the markets in general. Very, very tough. NETT is one of the stocks that was one of the first to turn positive, and this was, I'm taking you back to the middle of February, and let's take a look at some of the indicators, because while some of the indicators were starting to signal positive, not all of the indicators were, and that's why we didn't get involved in this stock until that May period, and we'll go ahead and review why. So up here I'm pointing out the RSI center line, and this is where, if you want to take notes, I'm going to start explaining and digging in a bit into how these various indicators work. So on the upper portion here, I'm showing you the RSI, or the Relative Strength Index, and this indicator it's intended to chart current as well as historical strength or weakness based on the closing prices of a stock. So your standard, and I'll go ahead and show you, for RSI, most of your charting services use a 14 time period, and it's indicated here. So in this instance, we're looking at a daily chart, so it's taking into account 14 days of activity, the last 14 days. So what it does is the indicator takes the closing price of those last 14 days and divides it by 14 and then plots it. So that's what we're looking at here. This dashed line is considered your net zero. So if the RS line is below your net zero, it indicates that it does not, the strength is negative. And if the RSI pops, this line pops above that net zero, it indicates positive. Your RSI is positive. Now I will say, for those of you that perhaps day trade, you can use shorter indicators. In 7 days would be one for the daily chart, and if you're using intraday, the 14 is fine there. So again, taking a look, let's go back to this trend, pardon me, the price history back here in the beginning of February. So we are starting in this period here to get signs that perhaps NETT has turned. And for those of you that aren't familiar, I'll go ahead and dig in a little bit here to MACD, which is presented below the price information. And the MACD, this has a center line as well. The dark line is your MACD line. And the red line is called a signal line, and the way that this is calculated is it takes a 26-day moving average and subtracts the 12-day moving average, and that is your darker line. That is your MACD. These are the standard settings. As mentioned, if you are a shorter-term trader, you can use shorter-term indicators that will be a bit faster. I have other tutorials that go into this a bit more, but two things that you want to pay attention to. One is when that dark line crosses up or below the red signal line. That is one criteria that you want to look for, but also you want to make sure that this black signal line is above, and in this case this is your net zero, that it is above it, because if it's acting out below here, it's not going to be quite as constructive. There are traders that will trade this, but from my work, it is more constructive if it is occurring above that net zero. So let's take a look here. Beginning of February, it looks as if things are starting to turn. Your RSI turns up, your MACD has crossed upward. So as an investor, you might be interested. Well, there is a third component, and I talked about it but didn't go into it, and that is your moving averages. So in this case, we have a 10-day, which is your green, and a 50-day, which is your red. And these are basically smoothed out lines. Moving averages, they help smooth out the price action of your stock, and they filter out the noise. So for instance, for that 10-day, it is taking your prior 10 days of activity and smoothing it out, and likewise this is taking your 50-day moving average. And despite this positive that we're starting to see in the RSI and in the MACD, your key moving averages are still trending down. So this is the third indicator. Ideally, you want these three indicators to each and every one be signaling positive. That's going to improve your odds. In some cases, you only need two indicators, but I will tell you from going through many charts over many years, these key moving averages are going to trump your RSI and your MACD. So the fact that your trend, and in the longer term trend, your 50-day is in a downtrend, that is very negative. It creates a heavy pattern. So you can see when this rally starts here, it finds resistance, and it will continue to find resistance as long as this trend is down. So here's another possible reversal. Things start picking up. It's interesting, but we still have these overwhelmingly negative key moving averages, which I hope you're taking note, and I hope it would keep you out of the stock. So let's go ahead and fast forward to the beginning of May, and the stock is exhibiting signs of turning, very similar to back in February, but hopefully you'll note that things look quite a bit different now. Two things. One, we did have the signal crossover here, which takes you to this period, and we also had the RSI turn positive. For those of you, there are traders that would trade this, but again, from my work, I would like to see it break above this 50-day moving average, and more importantly, the 50-day is starting to level out. So now it's breaking above a leveling out. Here it broke above it and it was still down. That's not going to be of interest to me. I want to see it at the very least that key moving average leveling out. So here we are, we're trending up. Your MACD has that positive signal crossover. Your RSI is indeed heading quite positive. So we have three indicators that are telling us that this stock looks interesting. I will tell you also, following it fundamentally, this was a very positive earnings release. So that's going to give it even more ammunition to continue its uptrend. So now we have a stock in an uptrend. I mentioned I would point out to you when you can know that the trend is still in place, and here is how you can do that. The 10-day moving average on your daily for these faster moving stocks is going to be really quite helpful. So if your 10-day moving average continues to trend upward, it's going to ideally act as support. So we have these big gaps up, it trends, it consolidates back to the 10-day, another gap up, back to the 10-day. Now, we did get a break in mid-June below it. For many of you, you may be shaken out, but I wanted to tell you why you should stay in. A break below the 10-day is not anywhere near as concerning as if it were to break the 50-day. So here we have a break through the 10-day, but let's take a look up here. Your RSI is still up here in positive. It's kind of net neutral, but it's not negative. So we're still okay there. We come down to the MACD. While you did get this signal down, you are still in positive territory. So you ideally, when you are looking for whether your trend is still in place, you'll want to pay attention to the RSI, the MACD, but also take a look at your 50-day. That's still in an uptrend, and you're still well above that 50-day. We will review other stocks that, and which will show you that if this break that's occurring here were to be at the 50-day, it would be an entirely different story. But we stayed with this stock. The other thing to keep in mind is the entire markets, and in particular technology, fell out of favor. So that's another item to bear in mind. You want to look at what's happening. Is this stock breaking down while the rest of the market is charging to new highs? That would be more concerning. So NETT continues to be on our list. It's continuing to be quite a big winning stock. So that what I wanted to show you here are all of the indicators, but now we will dig in individually with quite a few more examples. But before we do that, I wanted to review with you, there are 4 key ways that these trending indicators that we just reviewed, 4 key ways that you can use them. And one we reviewed already, it's defining a trend, up or down. We did review how you can use these indicators to identify when you should buy and get in, and when it's time to sell. And then also making sure that your trend is holding. Lastly, I'm going to review with you how you can use these indicators, and actually there's only one of these 3 that I use to determine broader market trends, because you really want to, this is critical, knowing how the whether the broader market is in an uptrend or downtrend should guide your investing. You don't want to be putting money to work if the broader markets are in a correction, certainly not if they're in a bear market. You want that uptrend in place and to have the wind behind your sails. So we'll review that going forward. So here's a look at another stock. It's Ellie May, and we're looking again at a daily stock, a daily price history review, and it's that same time period. I'm taking you back to the beginning of this year till the end of June, and let's take a look here. Similarly to NETT, it did reverse mid-February, but I hope that you'll be able to see some key differences in this uptrend. First off, we'll go back again, looking back at the RSI. The RSI clearly goes up into positive. It's above this net neutral, so we're up here in positive territory. Your MACD cross signal, but take a look at where the MACD is positioned compared, for instance, to NETT. Your MACD during this, the MACD darker line crossing the red signal line, it's occurring above that net zero. It's occurring in this positive territory, if you will. And two other key components or actions here. This time period when this occurs is coinciding with this huge gap up. This was an earnings release, and the stock on this day broke up above not only the 50-day but also the 200-day. And so we have three signals that are telling us that this stock is turning positive. And also note, if you will, that your key moving averages are at the very least trending sideways. They're not in that heavy downtrend that we saw before. So clear uptrend has been established. Now, a lot of people, a lot of investors may look at this kind of a big move and think that they missed it, but I will tell you again and again, for these more powerful stocks, they'll have these big intraday moves, 5%, 9%, and so forth. But if oftentimes they will go on to greater heights. So, so here we have a very clear uptrend that has been established, and it's taking us out to this 2-month period. But let's take a look, and I apologize, my keyboard is a little too sensitive, but if we're looking at Eli, take a look at the beginning of May, and we have quite the opposite occurring. In this particular instance, and I talked about this, I don't have the 10-day on this one, but I talked about if a stock price breaks below the 50 and it does so on big volume, that is a sign that a downtrend is in place. And then it is actually backed up by the RSI turning negative, and your MACD, it did turn negative here, but once it hits this below net zero, that's going to indicate indeed that there is your uptrend has been reversed. One thing I wanted to point out about this uptrend back here is, if you would take note again, this is volume, huge volume, and that was one of the characteristics I mentioned before that's going to really tell you that this is for real. So, so the downtrend, and this also was on an earnings release. That often earnings are going to be a trigger or a driver. So let's take a look at a different stock. This is AT&T, and again we're looking at a daily chart. I have a 10-day on this one, and that's green, and then your 50-day is the red. So this was another stock that we identified at the beginning of this year. We put this on our suggested holdings list, primarily because of the characteristics that you can see here. This particular stock, AT&T, really didn't get hit with the rest of the market, and that's really quite constructive. If you have a stock that's bucking a very, very heavy downtrend, that's really quite healthy. So the stock, this crossover that I mentioned, the dark coming up through the red signal, is occurring again in positive territory. Your RSI is turning positive, and your key moving average, your 50-day, is trending sideways and then up. So I talked about your faster stocks, and AT&T at the time was moving well ahead of the rest of the markets. Then you start using your 10-day as an indicator of trend. And so sure enough, the stock did slip below it just for a brief period, but your signals were still quite positive. But you're using this, and this is how, I have other tutorials for this, but how you pick buy points for these faster stocks. You don't want to chase them if they're extended. And then another item that I wanted to point out is as a way to keep you in these stocks where in this case the stock slipped but it held support here. It did dip below it in intraday, but it closed above the 50-day. So we're still doing okay here as far as the trend keeping you in this particular stock. Because even through this breakdown period, your MACD is still in positive territory, and it would keep you ideally in the stock. Now let's take a look at AT&T now. So that last slide took us right to this period, the very end of June. And so let's look at what's happening here. I didn't really mention this, but when your RSI gets above 70, it's what's in a position that's called or known as overbought. And the reason I'm pointing that out is it can remain in overbought for quite some time, but once it gets into overbought, you know that at some point there's an expectation that it will start to reverse the uptrend. It's been overbought, and this is the kind of thing that you can screen for. You screen for the RSI going down after being above 70, going below. So RSI begins to trend downward. Well, we're not entirely negative quite yet. It's more of a warning shot across the bow, so to speak. But really during this period, you weren't paid to be in the stock, but you can't ignore that things were still trending positive. You had key moving average trending positive. We did get that signal down, but we're still in positive territory throughout this period, but it should be alerting you to the fact that all is not particularly well. It's very different from this uptrend period. So as we move forward more recently in mid-August, the stock broke the 50-day, and take a look at that volume. That's very, very big relative to its average. So this is an indication that your uptrend has reversed. We also have the RSI crossing down, and your MACD, while not quite negative, it's very clearly heading that way. But again, you don't need all three indicators. Oftentimes just two indicators with volume will be enough so that you'll know that that uptrend has reversed. Now just, so we don't need to review that any further, but here's an indication of how, and I reviewed this before, how once your stock does go into an uptrend, how you can remain in the stock and not get shaken out. Again, same time period, the beginning of this year through the end of June, we're looking at a daily chart of AOS Smith. And in looking at this, again, we have this head fake is what I like to call it, but your key moving averages are in a downtrend. So from our work, we would not get involved. The stock would get quite a bit more interesting once it starts trading above these key moving averages. There is another indicator. It's called a golden cross, and it's when your shorter term moving average crosses up through the longer term. So this is your shorter term 10-day crossing up through the 50. So that is a positive indication. Your MACD is now in positive territory, and your RSI is as well. So from our work, we may not be the first one in, but when we do get involved in a stock, we know that the odds of an extended run or an uptrend are there, which is much more appealing to us. So here the stock is moving up. I talked about that 10-day, it's pulling back. Your key moving, your shorter term trend is clearly up. Your 50-day longer term is starting to turn up. But let's take a look at the beginning of May. And in this period, the stock broke that 10-day. The RSI got a little wobbly, but your MACD is still in positive territory. And what I wanted to point out here is this move was about a 9% move, and perhaps many of you don't have an appetite for that, and you wouldn't be wrong for selling during this period. But again, for our work, if it finds support at an upward trending 50-day moving average, we're going to stay with that stock. And sure enough, it did resume its previous uptrend. Same here. It did break down to that 50, but it has since resumed its uptrend. So let's take a look. I've been talking about individual stocks. What I'd like to review right now is how you can use these same principles to spot sector trends. And spotting sector trends is another key component for your investment, for your investing, because you want to make sure that you're fishing in a pond with healthy fish, so to speak, that the sector or the industry group that your stock is in, you want it to be indeed very strong. So in looking at that, what we're looking at here is what's called XLK, and that is the S&P Spider Technology Select Fund. So again, this very same period, the beginning of the year, you can see where this group got very hit. In fact, at the end of December in our newsletter, we were noting the shift into utilities, consumer staple, into safer groups out of technology. So we were able to advise our clients to enter the year not fully invested, which again is pointing out the need to pay attention to sector trends. So here is what we are looking at. Again, NETT would be in this technology sector, and we were, as you may recall, that was an early mover. So you were starting to get positive trends, and I'm pointing out early because again, there are traders that would trade this uptrend. They would trade this RSI, but our work would get us in during this period because your 50-day was still in a downtrend. However, we did put select stocks on as this trend was exhibiting an uptrend. So I did want to point out to you, this is taking us, I talked about this June period being difficult for tech stocks in general. That's the kind of thing that you want to pay attention to if you have a stock in technology and it's breaking down while the rest of the sector is heading up. You want to pay attention because that's not a positive. So let's take a look now, because what we were looking at before was the technology sector breaking down and not looking that positive. But since this period at the end of June, we did indeed get positive crossovers here. This takes us into the beginning of July. The sector price information did break above the 50-day. It did so on big volume, and we have the RSI heading into positive territory, and this got us back into a number of technology stocks, particularly the semiconductor area, which continues to be really, really quite strong. So let's take a look. Again, this is a daily display, and what I would like to point out to you is a downtrend reversal and how they can in fact be quite powerful. This is Universal Display Corp, OLED. Again, we are looking at a daily chart, and during the end of April into the beginning of May, the stock started to break down, and we had this crossover. Although still positive, it did go on into negative territory. The RSI very clearly went negative. But let's take a look here at what a reversal looks like. It's heading south. You don't want to be a buyer. It's finding resistance every time it trades up at it. But once we have this turn, three key occurrences. One is it's happening on volume. So we're breaking above the 50-day on volume. Huge. Your RSI turns positive, and your MACD not only turns positive, but it goes into positive territory. So here is a very clear-cut example of what a downtrend reversal can look like. And again, this was earnings related. It was a very nice gap up. For those of you, again, you think that you missed it, it did go on, and it has since gone on. So again, wanted to review because it is important how using these longer term trends will help keep you in a stock for a longer period of time. And what I'm referencing here is the stock, again, the beginning of the year, it breaks down a bit, but throughout this period, any time of crossovers into, below this 10-day moving average, they have occurred while your longer term trend is very clearly in an uptrend. These breakdowns have occurred while your MACD is in positive territory. And throughout this period, your RSI has remained above this net zero. So again, to help you stay with a stock and identify, what I'm pointing out here is this 50-day, your longer term moving average, is going to trump your shorter term. As long as this continues to be an uptrend, the stock does not break the longer term uptrend, and your RSI and MACD are here in positive territory, you should have the confidence to stay. Now, the only other caveat would be if the broader markets broke down, but during this period, we've been in a continued uptrend. So, what I'd like to do now is review specifically, after going over all of our examples, precisely how you can screen for these trends. And the first item here is looking for the RSI going above or below these key numbers. And these are the kind of things that you can go ahead and put into, depending on what platform you're using for screening purposes, but this is what's going to be helpful to you, whether you have these. You can do it as alerts on your existing list, or you can use these identifiers to put you in front of stocks that could be potentially going up or down. And then for MACD, let me just go back to that. For MACD, you want the MACD line, that is the darker line, to be greater than the MACD signal line. So the way that you would do that is your screen would ask that the prior day's MACD line is less than the prior day's MACD signal line, and then 2 days ago your MACD line is less than it was 2 days ago, your MACD signal, and so forth. And I hope I'm not confusing you, but what we are looking for here is over a 2 to 3 day period, is that MACD line crossing above the signal line? And you do want to screen for that. moving averages, and I talked about the golden cross where your shorter term moving average crosses up above the longer term. There's also what's called a death cross, and that is when your shorter term moving average crosses down below your longer term, and that is a death cross. And these are things that you can screen for. So let's take a look, and this is what I wanted to point out to you for longer term traders, and I think I made my point using weekly, by metrics I mean moving averages, is more effective for longer term traders. And let's take a look at some conclusions that we can draw after reviewing all of these examples. I mentioned to you that technical analysis is built around identifying trends. So if you can really learn these indicators, build them into your trading plan, it's really, really going to be important and a critical component. The other thing, we didn't get into this a lot, but you want to look at how your stock behaves historically. And by that I mean looking at a price chart. Each stock, I like to say stocks have their own personality, so that if they break a moving average, every time that occurs, it's a negative and so forth. But you really want to look at an historical chart to help you determine whether the trend you're identifying using history is in fact true. This last item, know yourself. If you're devoted, and by that I mean if you have time to continue to educate yourself, do this screening. It is really truly going to help you. If you are an individual that does not have a lot of time, or you would rather learn by seeing, I would say subscribe to a newsletter from a seasoned pro that will do the work for you. And of course we have our weekly Mem Edge report. Each time we identify a stock, we highlight precisely why that stock, which indicators. We also review fundamentally why we like a particular stock. Now, before I totally finished, I did mention that I would talk to you about the broader markets. And unfortunately, I failed to put it in there, but if I'm going to use the S&P 500 as an example. And when identifying and looking for trends in broader markets, the only indicator that I use, and I've found very, very useful, is moving averages. So you want your key longer-term moving averages to be in an uptrend. You want the stock to be finding support if it pulls back to this key moving average. The second item is you want to pay attention to volume on down days. If you start to see above average volume on down days, distribution, and you see that clustered together, that means that your uptrend could be putting up a red flag. So I did want to review that before, only because I mentioned that I would do that. So let's go ahead. I mentioned at the very end that I would have a special offer, and this is for a particular, this is a class, an audio class, a tutorial that I put together, and it is an hour long. And what it's reviewing is what I have been trained to do, and I continue to do, is using a system that will get you in front of these big winning stocks. And by big winning stocks, I mean stocks that are up at least 100% and many times 1,000%. And there are key characteristics of those stocks very much outside of what we reviewed today. And these 6 characteristics have been identified going back historically, looking at many winning stocks, Apple, Google, Microsoft, on and on. Each of these big winning stocks had these 6 key characteristics. It will review those for you. it also provides you with insights of where you can uncover those key characteristics. And there's also one key ingredient that is necessary in absolutely every winning stock. And today it is this particular item is being offered for only $39. So there is an instant access link at the bottom that you can access that will get you directly to a page so that you can take advantage of this offer. It's really quite powerful. A lot of this is the result of many, many years of studying the market, studying historical winners, and identifying these 6 key characteristics. So what I would like to do right now is go ahead and answer any questions. The first one is, will this be archived? Yes, this is and has been recorded. So at the end, you will be receiving an email with a recorded version so you can review it at your leisure. And there is another question here is, when you determine the trends, do you buy stock options or spreads? And Francis, I do not use options. I am very much stock, individual stock, sometimes sector ETFs, but options are not part of my investment portfolio. However, a lot of the stocks that hit my newsletter, we do have options traders that are able to actively to act on those stocks, and they've been really quite successful. And Mark wanted to know why I changed the moving averages to 50 and 200, and there's the reason for presentation purposes. Sometimes having that 200-day moving average on a chart when you're looking at these faster moving stocks, it's not going to have relevance because the price information is so far away from that 200-day moving average that it just is more noise than anything. So there's no other real reason why it wouldn't be on there. And let me just go a little bit further. Oh my gosh, you wanted me to repeat how to screen for the MACD. Oh my gosh, I will, you know, I have a whole nother webinar that gets a little bit more into it, but I'll give it. Basically, what you are looking for is, on a positive uptrend, you want to capture the crossover of the MACD line crossing up through the signal line. So the best way to do that is looking at, take the prior day's MAC line, and you want it to be less than the prior day's MACD signal line, and then your current day, you want to have the MACD darker line above the current day's signal line, so you're capturing that crossover. And I did go a little bit into it. There are those that want to see that same occurrence over a 2 to 3 day period, so you would use that same calculation going back where the line was less than it was 2 days ago or 3 days, and now it's positive. So hopefully that's a little more clear. Now, how do I determine more average volume than usual? What you can look for, there are, again, platforms that will draw a line through the volume that shows you here's what the average volume is, so that if that particular day's bar is above or below that, it's telling you that's the average. The other way, quite simply, is visually, is it above the bars that you are looking at going back historically. And there is another question here. I have a really hard time buying way above the 50-day moving average, and you could be right. Generally you don't want to chase stocks, but I will say, and if you're in a fast-moving group, I would suggest, for instance, now the semiconductors, most of those stocks are well above their 50 days. So you might want to try and overcome that bias, kind of tiptoe in and use the 10-day and see if you can. But really investing is all about your appetite for risk. You want to be able to sleep at night. You also really critically and important want to have stop losses in place to prevent losses, because we know the markets can be quite volatile. So I'm going to go ahead and move forward. How do you distinguish between a broader market correction and a bear reversal like what happened in December 2015? And if the broader market was to decline below the 200, how can you tell if that's a false break? Well, Ray, if you shoot me an email, and you can go to my website, meminvestmentresearch.com, you can go ahead and hit support. I'll direct you toward an article that I wrote for thestreet.com, and I outline precisely how you can tell that difference between a correction versus a bear market. And I think it will shed quite a bit of light, and anyone else who would like to be forwarded a copy of that. I was during that period, November of 2015 was another tough period. After August, we were able to keep our clients in the market. But there are definite indicators, and it has to do with the percent decline from the recent high as well as the time period. Day trading and strategies that I have for that, Hunter, gosh, I have another tutorial that talks specifically about key indicators, and that one gets really specific for day traders as far as what metrics. I unfortunately do not have that at my fingertips. Let me see if I can, I'll review my notes, and if I can get to that prior to this, I will. Otherwise, I would point you towards some of my other webinars and tutorials that get a little bit more into, okay, actually I found something for shorter term. I mentioned the MACD is the 26-day moving average minus the 12-day. For shorter term, you can use you know, I don't have it. I'm sorry, it's the 5. I did not keep my notes quite succinct enough, but if you want to shoot me an email, I can get that information to you. And Mark asked, do you trade Forex stocks? Foreign exchange rates, I'm sorry, because I do invest certainly in ADRs, and I prefer stocks. Well, it's a really quite simple reason. It is because that is what I know. It's what I know best. And a lot of this, what I've talked about as far as key indicators, can indeed very well and very much be used in for foreign exchange. You can use all of those metrics. I use foreign exchange, the dollar, the yen, all of those bigger picture to help determine to come to a conclusion on my thoughts for the broader market. I don't ignore foreign exchange by any means. It's a critical part of the U.S. economy and commodities and oil and so forth, but I don't trade it. Another question is use of a 20-day moving average is helpful, and I will say that this is where, when I talked about using history as your guide, there are some stocks that will obey, if you will, a 10-day and others a 20-day, and it's the kind of thing that if you are looking to enter a particular stock, go ahead and just try that 10-day. Is it applicable for that stock? And again, a 20-day can be very, very equally effective. Mark, do I use IBD or Market Smith? I don't use it actively, but it is a tool that periodically I'll use. and yeah, Market Smith, it's a great product. Yeah, they're both very good products. And scaling in on a position, again, this is where for each individual investor, you are going to have your own risk tolerance and appetite. So I pointed out earlier that some traders will get in early when that crossover occurs, even though it's not quite in positive territory. Likewise, if it's below a key moving average, and you know, you can use those indicators as a way to scale in, and as the indicators turn ideally more positive, then you can add to your position. Another rule of thumb, if you have a stock that has had an extensive move, a lot of times individual investors and people I work with will take their initial investment off the table and just let their profits do the work and continue to move higher. One indicator here is I didn't understand if using a 50-day for volume is a good idea, and I'm not quite sure of that question, but if a stock breaks below or above a 50-day moving average on volume, yes, that is a very good indicator that a shift may very well have occurred. And Bollinger Bands, I will tell you, I've heard good things. They're not in my tool shed, if you will. I don't use them. And add a link to my website. I'm thinking maybe that would be for my different tutorials. I can give that a try. I will have my my IT department, or my, you know, someone in my office can go ahead and help that. I think we're getting down to the bottom. My thought on trend lines, and there are many, someone mentioned Bollinger Bands. I use moving averages as my trend lines, and I cannot think more highly of them. The direction they're heading is important, as well as whether your stock is finding support or resistance at that moving average. Francis wanted to know the cost of the newsletter. Great question. It is $97 per month, but I do have a 1 month 4-week offer for $7. If you go ahead and contact support, they will provide you with the link at checkout, and it's quite simple. It is $7 and the word offer, and that will get you in front of our newsletter for 4 weeks. And then I also do a midweek report, which is really quite good, I have to say, where I drill down and not only review where the markets are, but on specific stocks in our list, pointing out their buy zones. This week I pointed out several of our semiconductor stocks had pulled back beautifully, and they've since been up quite nicely. Credit spreads is again not part of my forte. I've found over the years that trading stocks is works for me. It's very profitable, and I'm continuing for now to keep things, what you might say, simple. And interactive brokers, I do not use them, but I have heard wonderful things. They do have institutions that use them, so that would benefit you as far as seeing action and activity. So, and they're very, very well priced, but beyond that, I don't know enough. It's not a brokerage service that I use. And I believe we are at the end of our questions. Covered calls, no, I don't do those. But I really want to thank you for taking time out of your day to review this critical part of your trading, and you will be getting a link, so hopefully you review this again and again. And for those of you that want to take a look at my newsletter, I urge you to. We've had a lot of big, nice winning stocks come through, so I'd like for you to be able to take advantage of that. And hope you, each and every one of you, enjoy the upcoming long weekend. Thank you. Okay, one last question. Verified trading record. The stocks on my list, I indicate when they were put on as a buy and their returns up till now. So that is, I think, a great indicator of the potential returns going forward. Thank you again, everybody.